Good morning, traders from Chicago. It's 8:03 a.m. Central Time. It's Wednesday, the 27th of August, 2014. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Every once in a while, I get an accumulation of emails asking why I have to show this screen, why I have to read that every time. And the reason is that although my focus is trading, I'm also a registered broker with the NFA here in Chicago. I'm a licensed broker associated with Stage 5 Trading, the firm that I work for. And anything I do with the public that relates to trading requires a risk disclaimer. So that's why you're seeing that. Let's dig into the news real quick. The S&P cash closed above 2K for the first time. So, put on your party hats and so on. Italy's revising down its GDP forecast. Ukraine's reporting that while negotiations are taking place with Putin for de-escalation, armored vehicles are gathering at its border from Russia. Israel and Hamas agreed to an open-ended ceasefire proposed by Egypt. Other than that, there really isn't all that much in the overnight news. There are some smaller numbers out of Europe. German September consumer confidence misses 8.6 versus 8.9, and several other things that I just don't feel like are worth spending time on right now. The key thing to keep an eye on is the discussion between Putin and Poroshenko for bilateral talks in Minsk for de-escalation. But at the same time, Russia is insisting on sending another aid convoy into the Ukraine and is kind of shoving that through. The other thing is the CNN reports that the U.S. Coast Guard fired a single shot on an Iranian fishing boat in the Persian Gulf in a defensive maneuver. Not sure what the U.S. Coast Guard's doing in the Persian Gulf and why it's shooting at Iranians, but there you have it. Not sure if that's going to spark anything. I doubt it. But other than that, the numbers for today, we have crude oil at 9:30 Central. Crude oil inventory is expected at negative 1.8 million barrels. Distillates expected at negative 300,000, and U.S. gasoline inventory is expected at negative 1.725 million. So if you're trading QM, LCL, Brent, and so forth, you want to pay attention to that. And then as far as speakers, I don't see anything. I see a minor event here at 11 o'clock Central, 5 o'clock in Europe. UK, actually 5 o'clock UK, Merkel takes part in a panel discussion on the economy. And then as far as supply events, auctions, we have a 10:30 2-year FRN reopen for 13 billion and a 12 o'clock new 5-note auction for 35 billion at 12 o'clock Central. Let's get back to what really matters to us, which is what the price and volume is saying. So a quick overview of where we have been. Let's start with a monthly profile chart. So each one of these profiles, the colorful ones here, I don't use market profiling. I evolved from market profiling into volume profiling in 2005. I feel that using time to determine what the auction did in 30-minute brackets is just too granular for my time frame. Doesn't mean that it's not something that is valid, but it's for my time frame. It just doesn't provide enough information when I can get tick data and retain tick data for hundreds of days and see what actual volume took place at those prices. But essentially, each one of these colorful profiles is a market profile based on time. The gray profiles are volume profiles. and each one of these represents 1 month, at the beginning to the end of a month. So you see March here consolidating around the 1868. These are all continuous roll-adjusted contracts between 1800 and 1870 in March. Then we had April, which basically was a bearish engulfing, and then it came back and finished near the highs. In April, it finished above March, set us up for May, which was very, very balanced, and then it finally gapped up in May, which is a gap that we still have not tested yet, the gap I keep mentioning. We gapped up in May and have sort of an island at the top, closing at highs in May. Then we have June, where we have a very well structured profile where it actually built nice HVNs, then moved to the next area, creating a low volume node, then a next HVN and next HVN, and really created a very beautiful, not a balanced profile, but it shows this is how textbook-wise or theoretically a proper auction takes place in price discovery, in that it is rotating around price until it forms a lot of kurtosis or a sharpness in the histogram here, and then now it has the energy, because for every contract that's bought, one is sold, and there's so much energy from that interaction that one side ultimately ends up having to cover their position, and it pushes price through the next area, and then it starts to balance again, because valuation, the market starts to accept higher prices, and it continues to do so again and again and again. In June, the month finished near highs, very strong month, and then that brings us into July, and July was basically a balanced month from beginning to end. The market ended up balancing in a very wide range, with that former high at 85.75 and a low of about 45.75 or so, until it broke through this green day here. It ended up breaking lower on the 31st, if you recall, on the Ukraine news and some other things. It ended up breaking lower and pushing way down into the beginning of August. The beginning of August took us lower, tested 1899.75, and then basically has rotated one time framed up, and was trading in a very balanced, very controlled way for quite some time, until it breached 1945, 1946, and then from there on out, it just was on a tear through the high balance zone of July. One thing we would expect, now notice how there's a lot of volume here at 67.50. Notice how that's aligned with the prior month's point of control right here at 67.50. That's expected. This is why we keep track of where a high volume node is versus low volume node, and that action is expected. But what's not expected is that it would push into that high volume node, rest there for the session, then gap up and just never look back. Essentially, normally the market would take this price as acceptance, build a fairly decent amount of volume, repair some of the structure underneath. We have a lot of single prints here outlined by these thin lines here, to make sure that there is in fact no interest below by sellers. And once we find out that there are no sellers below, then it's able to rotate through the high volume node and then start to go back and forth, as a trend, as a slow trend. What it has done, though, is once it broke into the composite for July, which was at 1945.75, it just basically raced. You could see it spent very little time, and you could see it spent very little volume in between this 1950 area up to the point of control, and then the next day it basically gapped up and spent very little time with the rest of what was accepted for July. And it's just very, very unusual behavior. And now we're all the way up to the new high of year that was put in yesterday. That's the story. That's the big picture. And it's really important to keep track of what the big picture is doing, so you know where the stories come from, where the auction is coming from. You can better predict and have a higher probability of predicting where it's going to. This is my composite chart. It shows a lot of lines, but essentially we can remove some of these. Essentially what I have here is a chart that shows the daily for each bar. Each bar represents 1 day, and it's the day session only. It shows daily bars, and with this chart I'm looking at the profile going back to October 9th, 2013, and this is a big picture chart that shows me where the market has balanced and where the market has trended. So you could see the June balance here from the end of May through the end of June. July balance occurred on the 1st of July to the 30th of July. July 31st was that selling day, and in August spent the first half of the month balanced, and then for the rest of, since then, since it breached, like I said, since it breached this 45.75 low of July, it just basically has been one time framing up with a slight correction here, but it's a pretty strong one time frame all the way through. This is a roaring trend, and in watching risk for our traders at stage 5, I just see more and more people getting stubborn with this trend. It just makes no sense whatsoever to take a position based on what somebody said on CNBC or a forum or Twitter. It doesn't matter. You should be trading what you see, and what I see is a market that has made higher lows throughout, okay, except for this day, higher lows throughout, which technically means it's one time framing up. It does not have to make a higher high to one time frame up. It just has to make a higher low. And in doing so, it is not properly checking the prior value, testing the prior value, and then continuing higher. So it really has shown zero interest in selling. It is not pushing low enough to validate the prior area that was accepted. So let's put that on the value chart. So this is my profile only chart. The orange is the value area. The red dashes are the most traded price. As you can see here, the market does not go back and check that value very well. It did on some days, but it's leaving it behind. We're not resting enough. We've had a decent rest day here, the only day we had a lower low, but other than that, it's just not pushing low enough, and is finding buyers early. So the market moves down to find buyers, and if it finds buyers, then it starts to auction up to find sellers. And what it's doing is it's rotating just barely, rotating lower, and it finds buyers early, and it just does not go back to that area to reach. So that's what we've seen here for the last few days. This last Friday was the first Friday where we've had rest. We put in a lower low, but overall, when the market gaps up like this and has an open auction, and then ultimately tries to come back to the prior range and is not able to do so, this is a very bullish sign. That's a continued bullish sign. Do not fight it. Okay? So I just want to give you a big picture so you're not getting lost in the fact that we're against 2000 and you would expect some sort of selling against the 2000 at some point, and you start to create a bias where you're looking for a short all day. When the short is ready to show up, you'll see it in the form of high failures, in the form of an open drive lower, in the form of an open auction out of range that breaks lower and continues lower into the prior day's range, things like that. Now overnight, this market didn't do anything. It basically dropped to yesterday's low. Again, it's finding buyers earlier than it needs to, because buyers could have easily waited for that key 95, 75, 96 area yesterday, but they didn't. Stepped in at 97, and it's not able to push the high. So it's the overnight market has balanced. So today may give us an opportunity to rotate below 2000 and close some of these lines that are extended, these naked points of control, naked gaps, and so on. We'll see what happens as we open, but overall, the market's roaring up, and we've hit a major millennium figure here, and we'd expect option strikes, a major option strike, and so on, some activity up here. But overall, volume is very, very low, 716,000. It's about 500,000 short, 500, 600,000 short of what it normally is. The day before, 704,000, 926 on Friday, 670 last Thursday. Very low volume climb, never short, a dull, quiet market, as they say. Yesterday, let's read it as it happened. The market opened in range, in value, inside of Monday. It opened in range and value right here at 67.50. So the primary hypothesis for yesterday is that the market is likely to chop early, but test 96. As long as it tests and holds 96 or stays above 96, then we're likely to see the 2000, and then the next target up would be 2050, which happens to be today's overnight high, and then 2001 and a quarter. Those are the levels that I've been talking about. And so it does not quite give us a test lower, and it pushes directly into the 2000, gets a reaction immediately. So the opening swing low is at 97, the opening swing high is at 2000, tests the 2000 again. Notice that now we have a weak high, 2 taps of the 2000 with a mid pullback. So we expect the 2000 to be taken out with a pretty high probability, and there it goes. Takes it out by 3 ticks, and then comes right back into the opening swing. It's not able to leave the opening swing. If you recall, Monday was the same way. It just traded in the opening swing all day. A market that is strong, but it does not, it's not aggressive. Finally, we get a range extension up, and we push through to the 2001 quarter measured move target, and it looks like we're heading for the 2005, which is the next area up. 2002.75, we see an active seller here, brings it right back to the mid, and then finally gives up and sits sideways. This leaves us with a weak low yesterday. We still have a weak low with the overnight, so in this morning session, the expectation is that this low will be taken out as the market starts trading. We're currently trading at 98.75, right at the overnight point of control, but my expectation is that today will probably become rotational, and we're likely to start to clean up the areas below. If we fail to find buyers, then it'll start to get a little more aggressive on the downside, possibly pushing down into that 92.75 from a couple of days ago. We'll see what happens. But for today, my primary hypothesis is that it's likely to chop around in value here. Notice that the value area is a high kurtosis area. It's a high, it has a lot of concentrated volume here. Point of control is at 98.50. Market's trading at 99, 98.75. Assuming it does not move far from here in the next 7 minutes or so, the expectation is it would be trapped here, retest the 2000, possibly, or push to 99.75, and then start to work its way down into the 97. The expectation, as I say, the primary hypothesis for today is that this 97 is likely to go, and then we'll test the 96. And the 96, some significance. Not only is it a naked point of control, from a couple of days ago right here, 95.75. But if you recall from yesterday's overnight session, it was the low volume node left behind, and it was a key area for testing that yesterday's trade just could not get down to. So here's your 97 early right there, right at the open. This is a 15-minute all sessions chart, and here's a 97 at the closing swing. So that gives us a weak low, and here's the 97 in tonight's overnight session. Multiple tests on the 2050, weak high on the overnight, but I give more credence to the weak low in the day session and the weak high overnight. So the expectation this morning is a break of the 97, and for it to get down and fill in the 95.75 point control. The gap has been closed. Hang on. The gap has to be closed beyond that, or is likely to be closed beyond that 95, and then the value area for this day is still valid. So the targets below, this is a tight market. Again, the range has been tight. You can see here from my range chart, if you look under the composite, this graph here is the daily range on the day session. You can see how it's compressing. See how the range is dropping. Volume is very steady at about 700,000 or so, but volume is the range is compressing. So what you have is some consolidation going on. The market's likely to flag, and I expect today to be the first day to start forming the flag to the downside for a later breakout higher to go with the trend, targeting 2005, 2013, 50, 2020, 2021 and a quarter. And as you can see them, that's all I'm reading is my measured move targets. But I prefer a move lower, but the market could not give two you-know-whats about what I prefer. The market's going to trade in whichever direction the most participants are going to come in. And my job is to detect when that happens, but I cannot detect when that happens if I don't already have an idea of what it has done, what it's likely to do. And as I've said many, many times in these videos, it is a pleasure when I have a strong hypothesis, that I feel a high probability hypothesis, and the market goes and it violates it. It absolutely reneges on it. What happens then is it creates a very, very clear contrast for me to trade from. An analogy would be if you touched a surface and that surface was close to the temperature of your skin, it's hard to tell if it's warm or cold. But if you expect the surface to be freezing cold and you put your finger on it and touch it and it's scalding hot, you know without a doubt that it is really hot. But if you expect the surface to be cold and you're coming in with the view that it's cold and your hands are cold and you touch it, it doesn't give you that much of an example. I can't think of a better analogy right now, but I like to have that I like to have that the market just completely violate what I'm expecting, because in violating what I expect, in a way, it helps confirm with much more certainty for me personally in my trading the opposite hypothesis. And I always have 3 hypotheses on the market. At a minimum, I only cover 1 or 2 with you because I'm trying to cut back on the length of these videos. But there's always the opposite hypothesis, and I'm looking for the market to tell me which way it's going to go. This video has been very long because I wanted to go soup to nuts a little bit with the process. For those, I see there are many, many more new viewers, and the viewers of the YouTube videos have reached the 800s and so on, so I'm sure there are more people viewing these, and I really, really appreciate that. By the way, I think we're successful in liking these videos and being able to broadcast in 1080p. I think YouTube just sent me an email saying I'm authorized to do my live videos through their Pro channel. So I'm going to give that a test and see how that works. So these images will be a lot cleaner in 1080p. Appreciate you liking the videos. I suggest you continue to like the videos so we can keep that status. So as a service to me, please, by the end of this broadcast, please hit the like button. It takes 1 click, and it keeps us receiving the best from YouTube and Google. I appreciate you coming on, and if you have questions, contact me at futurestrader.com/contact. The glossary's on there. Chat archive is on there. A lot of stuff is on there. I'm not that active on that website still. Hiring an intern soon to kind of keep that fresh, keep my studies going and things like that. But there's a wealth of information there. Good luck.